Mike here, head trader, True Trading Group, July 30th. Nice green day. If you guys saw my video from yesterday, I closed out of those Beyond Meat put options today, a 50% gain. I exited those at $30 a contract. I bought them yesterday for $20.19 a contract. Luck helped me out with that trade, guys. The news of an offering with Beyond Meat after they did their earnings announcement. If you missed that video, go back and check it out. It was just published yesterday. When I bought the Beyond Meat put options, and in that video, I walk you guys through that trade, what I was thinking, how I got a little lucky with the trade, and if you missed it, go check it out. It's a pretty good one. So I ended up closing out those put options this morning. I thought we were going to get more downside on Beyond Meat, but actually, before I get into the Beyond Meat trade, guys, this video is going to be, I'm going to talk to you about not this Beyond Meat trade. It's not the focus of the video. The focus of this video is an option trade I made in the SPY. And I'm going to talk to you today about really being able to nail the perfect entry on a trade and how you can go about, and some helpful, useful, and helpful tips to really get the best risk reward and to really pick your spots, be a sniper, and nail that perfect entry. Because a lot of traders struggle with getting that perfect entry, and they struggle with pulling the trigger. And I'm going to go over some helpful hints and stuff that I used today in this SPY option trade. I made about 35% on the SPY option trade, so I'm going to get to that in a second. Okay, so with regards to Beyond Meat, just real quick, I want to talk to you about a certain level at around 192. Okay, I take you guys out to a 15-minute chart. When we gapped down today, okay, I had, again, watch the video from yesterday. I bought the August 2nd expiration, okay? I bought the August 2nd expiration, $220 strike put options yesterday before the close. I bought them right in here, okay? So we had the big gap down, and I said to myself, if we stay below 192, I think that Beyond Meat has room down towards 180, and at least to kind of get down here and kind of fill this little gap right here down towards 178, 179. So that's what I was looking for. So right off the bell, I was still, I held on to my whole position on those contracts. Right off the bell, okay, you can see we pushed up, tested that level. Here's that resistance level that I drew on the daily or on the 15-minute chart. Again, there's the line. When I go to the intraday, there it is. Okay, so right off the bat, we went up, tested it, and then pulled back, and I was like, okay, money. We're going to roll this down. We're going to go down towards 180, but we held and broke up through that level. So as soon as we broke through that level, guys, right there is where I exited those put options, and I'm glad I did because Beyond Meat continued way higher. Take you guys to my trade announcements. Here it is, final take profit, Beyond Meat, 220.82 put option. Again, that's a $220 strike. August 2nd put option at $30. Okay, if you guys watched the video from yesterday, you'll see I bought them at $20.19. All right, so I exited them right there. That's a 50% gain on those contracts. Now, let's get to the SPY and the lesson of the day, which is how to identify great risk reward and how to pick those perfect spots and those perfect entries on a trade. We had this gap down today on the SPY, and I said to myself, if we rally this back, if this gap down gets bought up, there's a very specific resistance level that I'm going to look for to get short the market, or in this case, buy put options, which essentially is the same thing. You're essentially shorting the market when you're buying put options, betting the market's going to go down. There's a specific level that I want to point out to you guys, and here it is. Okay, here is this level. It's yesterday's low, which also lines up with a little area of support from the day before, and some resistance from the day before that. Okay, so yesterday's low on Monday, there's your support level. Then you go to Friday, okay, there's your support level. And then you go to Thursday, there's your resistance level. So this 300, 301 area is a key level of support and resistance. It's just a key level in general for the SPY. So when we got down, we started to push higher like this. I said to myself, guys, I'm looking to get short the market in front of this level. Also understanding what day it is. Today was the first day of Fed meeting. We've got the rate hike decision tomorrow. So you have to kind of expect going into the day that you're not going to get a huge directional move one way or the other. You're not going to get the SPY is going to rip up to 302. You're not going to get the SPY is going to collapse down to 298. You're not going to get a huge directional move before the rate hike decision because no one's really willing to take a big directional bet one way or the other before they see what the Fed is going to do. So when this gap down got bought up and we started to push up here, I'm saying this is a perfect resistance level, okay, to hold. I'm not expecting, the SPY to blow through resistance levels, just like I'm not expecting it to crash through support levels on a day like today. I expect the same type of thing tomorrow. Once the Fed makes their rate decision, then, game on. Okay, then anything goes. But prior to that, I don't think we're going to get big moves one way or the other. I think support and resistance levels will hold. Okay, so that's what I was thinking here with the SPY. Now that I have an idea and a thesis where I'm saying, okay, I'm going to look to get short the market in front of this level, I identified this level on a longer time frame. That's where you generate your trade ideas. It's on a longer time frame. So I'm using a 15-minute chart here to identify this level, and now I found a resistance level around 301. It's just below 301. Like right here, it's like 390. Just below 301. Now that you have this level, you look for intraday patterns and intraday setups that coincide with this longer time frame level. Okay, that's how same way I come up with my trade ideas on the daily chart. The first thing you do is you look, you identify support and resistance levels on the daily chart, and then you look for intraday setups that coincide with those same levels on the longer time frame. That's how you pick your spots. Okay, again, I'll say it again. You identify levels on longer time frames. Then you use intraday setups and patterns to pick your spots. That is how you can nail that perfect entry. That's exactly what I did on the SPY put option today, because as I zoom this in, you guys start to notice, I'm going to move to a 5-minute chart because it's more clear on a 5-minute chart. Here's a 5-minute chart. You start to notice a nice little ascending wedge pattern. Okay, so here is this nice little ascending wedge pattern on the SPY. And this ascending wedge, we know, is a bearish pattern that typically forms at the top end of an up move. It signals the stock is starting to tire. It's saying the stock's starting to run out of steam. And typically you get a rollover and a pullback once the stock falls out of the wedge. So the fact that I'm getting a bearish pattern that lines up with a resistance level that I identified on a longer time frame, now I can pick my spot. So right here, guys, when we pushed up here and tapped that resistance, let me go back to a 3-minute now. So right up on this candle, guys, this green candle right up here, we actually made a new high of the day. And as soon as we got rejected like that, bang, I jumped in put options. The $300 strike, July 31st expiration put options at 84 cents. I'll take you guys to my trade announcements. Here it is. Bought the SPY 300 strike, July 31st put option at 84 cents. Stop loss if SPY gets above 301. Look at where my stop loss is in comparison to my entry. Tiny, 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 tiny risk with excellent reward. Okay, excellent reward. This is how you guys use these levels to pick your spots. An inexperienced trader is going to look at this and say, is going to look at that green candle right there and say, ooh, new high of the day, time to get long. That means the market's strong. And that's because they're not looking at the big picture. They're not properly analyzing the chart. They're not properly identifying resistance levels. They're not properly identifying intraday setups and patterns. And that new high of the day was a trap. Okay, at 11:30, you're about to enter lunchtime. We went up there, tapped that resistance level, that pulled back into the ascending wedge, that triggered the ascending wedge breakdown, and I jumped in the put options there at 84 cents. We fell out of the wedge and rolled it down towards VWAP. Okay, my first take profit target was VWAP. Right there, I took 25% of my position off the table. You guys can see, took some profit at $1 from the 84 cent per contract entry. The reason why this was my first take profit was because VWAP had previously shown us that it was an area of support for the SPY in the morning. Okay, you can see support, 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 support. So I'm going to expect support again when we get down here. And surely enough, there it is. There's your VWAP support. We get a little bit of a bounce back off that VWAP area. Okay, not surprised. We expected support at VWAP. So we bounce it back. We find resistance here around 375, roll it back down. And right here, we break down below VWAP, and I take the bulk of my position off the table. I sold 50% of the position right here at $1.13. You guys can see it took more profit. SPY 300, 731 put option, $1.13. That's a 35% gain on the bulk of the position. And I was holding on to one last piece because I thought if we broke down below VWAP here, okay, I thought we had a chance to roll this thing, back down towards 300. Okay, so I thought we had a chance to get a little bit more, so I held on to 25% of the position. But you can see this VWAP proved to be too strong of a support level, and we ended up pushing back up and actually making a new high. And on this new high right there, I got rid of the last piece for basically break even. You see I sold out of the remaining contracts at 85 cents. So basically break even because I bought them at 84. But still a 35% gain on the bulk of the position. Was a nice trade, was a very, very calculated trade. And this is how you guys can use intraday setups to coincide with levels on a longer time frame to really pick your spots and identify that perfect entry point that'll give you the best risk reward on the trade that you're going for. And as a trader, guys, that is all you can do. That's all you can ask for, is to identify good, high probability setups and put yourself in good risk reward scenarios. That's all you can do. Nobody has a crystal ball. Okay, no one knows for certain what a stock is going to do. It's all educated guesses and analysis, understanding when you see a specific setup, what usually happens the majority of the time. And that's all you can really ask of yourself, is to put yourself in these great risk reward scenarios. And that's how I do it. That's what I do to use to try to get that perfect entry point and put myself in those situations. So I hope this helps you guys do the same. Okay? I'll see you guys in chat tomorrow. Take care.